Good morning and welcome to our presentation. Can I please have the first slide? First slide, please. So welcome to the LendInvest 2021 Broker Kickoff events, where we will be talking about working with us to get the most out of our criteria. My colleague Pete will be looking at case studies, and I'll be looking at criteria changes and listening to your feedback as well. Next slide, please. So the agenda today, this is a 20-minute session with my colleague and myself, and we will be aiming to answer all your questions. Hopefully we'll be able to get around to all of them, but if we do run out of time, please do take note of our email address, telephone number, or if you want to talk about any case specifics, and we're more than happy to pick up after this call and after this session, since it is only 20 minutes long. So I'll be covering criteria. Naturally, criteria is a very large topic, so I'll absolutely do my best to do this in 10 minutes. So as we know, rates and fees are important to clients, but criteria is equally as important, if not arguably more important. The reason being is this can mean the difference between a decline and a completion. So what I want to make sure today is that actually we get the most out of criteria and we know exactly what we can refer and not, to make sure that our conversion rates remain high and we don't waste anyone's time. What I'll do is I'm going to focus on just 7 key points, which could be detrimental to all cases, in the hope that this benefits everyone on the call. As mentioned, please feel free to ask any questions, and we can also pick up at the end if we don't cover all of them. Next slide, please. So what will we cover? I'm going to be covering income, what income is needed for what loan to value products. I'll also be looking at ICR stress tests, which apply to the background portfolio, as well as the ICR options for the case in question. I'll also be looking at exposure limits, and this is per client, per block, and per postcode. I'll also be looking at experience, what experience is required, and any key restrictions in place that you need to know about. And I'll also then be moving on to acceptable properties, what we like and what we do not like. Then talk about credit, which is obviously very key. We offer tier 1 and tier 2, so we'll cover that off. And then I'll be looking at open market value versus purchase price, and when that can benefit a client, and when the landlords will be, be able to benefit on that one. So I don't know if there's a problem with the slides. So if there is, apologies. I'm just going to move on to the next one and look into affordability. So hopefully the slides are keeping up with myself. So if not, if the slides aren't there, don't worry, you can just listen to me and I'll be reading them off anyway. So let's talk about income. So the slide on income. It's really important to know that we assess income on an affordability basis. So it's really, really important to know there isn't a minimum income. However, there are 2 caveats in place. So we do require £30,000 for first-time landlords to help eliminate any risk there. And we also require £40,000 for 80% loan to value products. Obviously, this loan to value is very high, and again, just eliminate the risk. It's really key to know that for personal buy-to-lets, we can have up to 2 applicants, and for limited company buy-to-lets, we can have up to 4 applicants. And the income is as a whole. So for instance, if you have 2 applicants earning £15,000 and they're both first-time landlords, again, this would be sufficient. So income is combined. I'm just going to talk about a quick example where income may be sufficient and where it may not be sufficient. So you may have someone earning £25,000 and have very low outgoings, living a modest life, and therefore we would deem them, on affordability basis to meet our criteria. You may have someone earning, say, £90,000, which is a large income, but spending over £100,000, and therefore that would not meet our criteria. So moving on to the next slide, please, which we're going to talk about stress tests, hopefully. Okay, I'm going to talk about it anyway. So first things first, it's really key to know that we're not actually affected by the PRA rules. And this is a massive competitive edge for lending desks, especially compared to the high street lenders. And it means that the rent will go so much further with us than most other lenders. The reason being is because we've not actually got the same rules, and we don't actually have the same banking license in place. So therefore those rules don't apply. And this allows landlords to really gear up to those high loan to values and access their equity. We often get landlords bringing to us their portfolios in the hope to be able to refinance a large portion of it to access that equity. And we can go down to ICRs as low as 3.64, so it's very, very favourable. In regards to portfolio stress tests, so the background portfolio, we only need to have it fitting 125 at 5.5. We do also have scope to go down to 110 at 5.5, but we do want this to be referred to a BDM who can then speak to an underwriter, because what we want to see is the strength and the case as a whole, and to see that income actually supports that as well. What we don't want to see is a low stress test in the background and obviously low income, because then there may be concerns. But for instance, if the income is high, it's definitely worth referring and speaking to a BDM. So we go on to the next slide, please, which is exposure limits. So exposure limits, there's 3 limits with us. I'm going to be talking about the limits on an individual or company and what their exposure limits are. I'm going to be talking about postcode exposure limits, and I'm also going to be talking about limits within a block. First things first, lending can actually lend up to £5 million per client or per company, which is brilliant and really, really popular. There are 3 tiers involved. So the first tier is we can lend up to £3 million, and this is an aggregate loan to value of 75% loan to value. The next tier is we can lend up to £4 million, where the aggregate loan to value needs to be 70%. And finally, the third tier, we can lend up to £5 million on maximum, and that tier needs to be an aggregate loan to value of 65% loan to value. So it's whatever comes first. So we can lend up to 20 properties or on the aggregate loan to value. But again, if this is slightly confusing, again, always speak to your BDM and we're happy to explain in more detail. So where we're lending over 2 million, we may require an interview with the underwriter, and they will just interview to have an understanding of what the client is trying to do, what their appetite is, what their plans are, and then we can get comfortable with working alongside. So landlords, as mentioned earlier, they do take advantage of our ICR rates because they're really low. We have ICR rates as low as 5, 4, and for limited companies as low as 3.64. Meaning that actually lending up to the 5 million is really, really popular. And like I said before, they actually bring up their portfolios to us in the hope to remortgage a large proportion of it and access the equity within it. Another thing that's worth knowing is we actually offer pre-agreed appetite statements. And this is where we will have a client that's maybe had a completion with us, that's recent completion, or has got to offer stage, and they're saying actually they want to be doing more lending and more buying, and we'll sit down and have an interview with them just to understand exactly what they're trying to do, and we can put aside, for instance, £2 million for them only. So the only thing we'll want to know is where are they lending, what types of property are they lending on, and do they have the relevant experience within that area and also within that property as well. So moving on to exposures. So we have exposures in blocks. They're very, very flexible though, and this is what we can offer. So in a block of up to 4, we can offer 50% exposure. In a block of up to 10 units, we can offer 40%, and thereafter it's 25% with a maximum of 5 units. Last but not least, looking at postcodes, we do have postcode exposure limits where we can lend up to 15 per postcode. Again, if you're unsure where the postcode sits, which you're not going to know, please do check with your BDM. And I would say only check where you feel the postcode is quite a popular postcode. So what we look at is we look at the first section and the next number of the next section, for instance, N16 5. But like I say, if you're ever in doubt, check with your BDM, and we can also look into it and tell you exactly how exposed we are in any one postcode area. But it hasn't caused us problems to date. So moving on to the next slide, which is experience. So just wait for the slide to load. Okay, so experience. So we can lend to first-time landlords and experienced buy-to-let landlords, which is brilliant. Naturally, experienced buy-to-let landlords tends to be our bread and butter, but we can lend to first-time landlords. As mentioned, they need to be earning the £30,000 and it will be restricted to 70% loan to value. It's really, really key to know that they will need to own their own main residence for at least 6 months, whereas buy-to-let landlords don't necessarily have to own a main residence. What we need to see from them is they've had buy-to-let experience of 12 months or more, and we can then lend them up to 80% loan to value. Naturally, we lend to larger assets such as HMOs and multi-unit freehold blocks. So that's up to 10 units or 10 rooms, and we have small HMOs and large HMOs. Where there are large assets, we do want to see large asset experience. However, it's really, really important to know that we can actually have something called an exception, where we have an exception form that goes directly to the underwriter, and we can make exceptions such as if somebody is purchasing a multi-unit freehold block, but it may be a small multi-unit freehold block, such as 2 units, and they might just be a buy-to-let landlord, but maybe have 7 buy-to-lets, we could put that on an exception, and then we'd see if the underwriter would take a look at that. Naturally, if the income is there, the credit is there, the property structure is there, the demand is there, and the case is strong as a whole, but there's one little element of the lacking of the large asset experience, is probably going to be looked upon lightly. So please do always use us BDMs and inquire with us so we can check these cases and hopefully get them through for you. So moving on to the next slide, which is acceptable property types. Again, I'm just going to wait for that to load. So what is an acceptable property type for us? So first things first, we only like standard construction, and we can lend to buildings of up to 10 stories high in London and Greater London and 5 stories high outside of London. Any stories that are higher than 4 stories will need to have a lift. And again, like I say, this is just guidelines. We have lent on higher stories. However, it will need that exception form. So please do speak to your BDM. We also lend to new build flats and houses up to 75% loan to value. And we also lend to buildings with deck and balcony access, subject to underwriters and valuers' comments. For studios flats, we do lend to them, but please bear in mind that they have to be 30 square metres or above. If they're under, it's not going to get through an exception. And we can lend to student lets where the HMO is 6 rooms and below. For ex-local authority flats, we can absolutely lend on those. We do like to have the property 50% privately owned, but this again isn't necessarily have to be the case. So again, we can come in and use that exception form if we can show that the location, the demand and the client is actually strong. We don't tend to like buildings with cladding, so personally I suggest steering clear of these. However, we may consider them if they have the EWS1 form and are under 18 metres, but again, I'd highly recommend you speak to your BDM first. And it's worth noting that we do stay clear of properties that are above restaurants or takeaways or left or right, because we see these as undesirable, and this is for the reason because of noise and smell. So this is something we do tend to stay clear of, so no fast food outlets. So moving on to the next slide, which is credit. So I'll just give a couple of seconds for it to move on. Okay, so credit, we have a tier 1 and a tier 2 option, which is brilliant because we've all come across the client that kind of slightly falls into tier 2. The good news is we do have those options, and our rates start from 2.99 and go to 4.89. So payment holidays and bounce back loans have obviously been the buzzword since COVID. We've heard about them non-stop, no doubt. And the good news is we actually will consider any clients that have had a payment holiday or a bounce back loan. It's really, really key to understand what we're looking for. And we want to see that those clients took it as a precautionary measure rather than they're in a financially distressed situation. So again, it's kind of a common sense approach, but again, if you're in doubt, please refer to the BDM who can speak directly to the underwriter. We will consider these on a case-by-case basis. However, for us to consider, it will be mandatory that the client informs us upfront, and we will request open banking, which my colleague Pete will speak about later. So I'm going to finally move on to the last slides. So next slide, please, which is open market versus purchase price. So naturally, we all know that landlords are keen to add value to property. and they're always looking for opportunity to do this. It may be way of a loft extension, it may be way of a kind of a conversion, it might be in way of a kind of a tart and a turn. The good news is LendInvest can actually do a day one remortgage and go off of the open market value, but it's really key to understand when this can be applied. So this is applied when we can see a schedule of works and we can see that actually the property has fundamentally changed and been added value, even if it is a month later or two. So this could be through, like I mentioned, a lease extension, an extension, a loft conversion, and this is obviously really appealing to a lot of clients because it means that they can not only add equity, they can access that equity very fast, and it allows them to remortgage, get that allow them to access that equity and obviously go on to invest in further properties, whether that's through a limited company or personal name. We don't want any distressed sales, and the reason being is because this could be unravelled 5 years down the line. So please, again, check with your BDM. But an example of where this can be applied is, for instance, if you've got maybe a 200k property and you're looking to do a light refurb or what is commonly called a tartan and turn, you might spend £20,000 doing maybe the kitchen, the bathroom, and then maybe an increase to £270,000. We can take that bridge out or come to us straight away and do 75% on a day one remortgage and go off for that open market value, so the £270,000. So I'm just going to quickly wrap up, and I just think it's really, really key to know that obviously we do have criteria here. It does act as a guide, but you know, it's always good to speak to your BDM who can actually see if there's a grey area, if we can get it through, and we can ultimately guide you through. But do remember, we're not affected by the PRA rules. We do have low ICR rates. We can do a day one remortgage and go off for the open market value. So I'm going to pass you over to my colleague Pete, who's now going to talk about case studies and hopefully put a bit of this criteria into kind of context for you.
Yeah, thanks for that, Abby. Good morning, guys. Thanks for taking part of the broker day. I thought it would be a good idea, as Abby said, to put the criteria that she's gone through quite well into some practical examples of deals that we completed in the past few months. So if we could go on to the next slide, please. So the first one I'm going to talk about was a first-time landlord purchase. So this client had set up an SPV to make his first buy-to-let purchase in York. This was to be the first in his portfolio, so he was an aspiring portfolio landlord. And this particular property was a standard semi-detached house on a residential street. If we can go on to the next slide, well, that one was at 70% loan to value, as it was a first-time landlord purchase. So if we can go on to the next slide, we'll talk about another case that we did recently. So this was in London. This was a refinance from a LendInvest bridge. The clients were portfolio landlords, so they were experienced in purchasing properties slightly below market value, refurbing them at a low cost, and then refinancing them onto buy-to-let mortgages. This particular one, we provided an appetite statement that has been mentioned previously at the offer to essentially just encourage repeat business. This particular property was a HMO close to a university and a tube station, actually. We went up to 75% loan to value on that one. We can go on to the next slide, please. So the next one, case study, this one was based in Box Hill. Inquiry came from Mr. and Mrs. They had one other buy-to-let in the background. They again had taken out a bridge on a detached house. They had a deadline to meet that was set by the seller, and we also had to try and speed it up on the buy-to-let side as well to get them completed on time. So we should hopefully be on the slide a case study that was based in Nottingham. This case came from a client who develops properties and sells as well as retains some of them. They wanted to raise finance on a property in their portfolio in order to purchase some land to then do some further development. And this was a large detached house in Nottingham. Hopefully we're on the slide based in Newquay. This was from a broker who's using us for the first time. I wasn't sure if we'd be able to proceed on a case like this, where it was previously a holiday home that was being converted into a HMO. We were able to get that one done. That was a good case. And the last case study, I'm not too sure what you guys are seeing, but this one came from one of Abby's brokers who just spoke. This property had a sitting tenant at the time. So there was some perceived difficulty around getting this deal done. And essentially what they did is they purchased it at 100K on a bridge, did some works, and we were able to refinance on a buy-to-let at the open market value, as she's just explained. This was a terraced house in North London. So hopefully you guys have been able to see how the criteria can quite evidently, show in some actual completed cases that we've done in the last few months. So yeah, I hope you've been able to take some nuggets of that. And if you have any questions, we can go into those now. So I have a question here. Would a completion certificate be required for a refurbed property prior to drawdown? No, it won't be.
See another question here. Do we accept gifted deposits for purchases? The answer is we do. We want them from close family, so your mum, your dad's. We don't want them coming from, for instance, an uncle or a friend. And we might require, actually 9 times out of 10, we will require for 10% to be put in by the actual client purchasing, just to make sure that they've got some money put down themselves. And what is often referred to as kind of skin in the game as a slang word for it. So it just obviously eliminates that risk. So you're absolutely right. We do actually accept gifted deposits. We also accept, while I'm on the topic, if there's no other questions, intercompany loans. And we also can do a 3-tier company setups as well, which is good. And we lend to kind of limited companies, LLPs, and personal names and SPVs, as long as the SPV has the correct SIC code, which again, check with your BDM. So I think the message of today is, if you're in doubt, do always check with your BDM. And as you can see on the last slide here, you've got my name, telephone number, and email address, and you've also got Pete's name, telephone number, and email address. So again, if you've got any other questions that you're maybe a bit shy to ask, or they haven't come to mind, or if it's maybe about case specific, then please feel free to obviously pick up with us later. We're more than happy to spend the time going over that. On the note of time now, I can see that it is 22 minutes past, and I don't want you to be late for any extra sessions. So just want to wrap up and say thank you so much for your time, and thanks for supporting us and joining us and listening to us. And hopefully we can look forward to supporting you and your clients with any future cases. Thank you.